Preparing for a Bank of Queensland graduate interview questions interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to join Bank of Queensland's graduate program? I want to join BOQ because it combines the scale and discipline of banking with a strong focus on customers and communities. I am attracted to the graduate program's structured rotations, practical learning, and exposure to different parts of the organization. My accounting and analytical background would help me contribute immediately, while the program would develop my commercial judgment. I also value BOQ's multi-brand environment because it should expose me to varied customer needs and operating models. While answering, connect BOQ's customer focus, Australian banking footprint, graduate development opportunities, and your genuine interest in learning across banking functions. Explain why the organization suits your skills and long-term career direction. Question 2. What do you know about Bank of Queensland and its business? BOQ is an Australian banking group serving retail, small business, and commercial customers through brands including Bank of Queensland, Me, and Virgin Money Australia. Its core model is to gather deposits and provide loans, earning interest income while managing credit, funding, and operational risk. The group competes through customer relationships, service, products, and technology. I understand that sustainable performance depends not only on growth, but also on prudent lending, strong controls, and customer trust. Make sure to cover BOQ as an Australian banking group, its retail and business banking activities, customer deposits and lending model, broad brand portfolio, and the importance of trust, risk management, and digital capability. Question 3. Why do you want to work in banking? Banking interests me because it sits at the center of the economy. It helps households buy homes, businesses invest, and communities grow. I enjoy combining quantitative analysis with decisions that affect real customers. The industry also requires discipline around risk, regulation, and ethics, which suits my methodical approach. A graduate role would let me build technical knowledge while developing communication and commercial judgment. I am motivated by work where accuracy and sound decisions have visible consequences. In your answer, talk about banking's economic importance, the balance between analysis and customer outcomes, exposure to risk and regulation, and how your capabilities match the industry's pace, responsibility, and learning opportunities. Question 4. Tell me about yourself and why your experience is relevant to this role. I am an accounting and finance graduate who enjoys understanding how numbers support better decisions. Through university projects and part-time work, I developed analytical skills, attention to detail, and confidence collaborating with different people. For example, I helped reconcile inconsistent data before a group presentation, improving both accuracy and our recommendation. Those experiences are relevant to BOQ because graduates must learn quickly, communicate clearly, and protect customers and the organization through reliable work. I am now ready to apply those skills in banking. Be sure to mention your academic foundation, relevant work or extracurricular evidence, transferable skills, and a clear link between those experiences and BOQ's need for analytical, collaborative, customer-focused graduates. Question 5. Describe a time you worked effectively in a team. In a university consulting project, our team had conflicting views about the recommended market entry strategy. I suggested that we agree evaluation criteria first, then compare each option against customer demand, cost, and implementation risk. I researched the financial assumptions and summarized the evidence for the group. This helped us reach a defensible decision without making the discussion personal. We delivered the presentation on time and received strong feedback. I learned that structured debate usually produces better teamwork than simply seeking consensus. Use the STAR structure and explain the team objective, your specific contribution, how you handled differing views, the measurable result, and what the experience taught you about accountability and collaboration. Question 6. Tell me about a time you demonstrated leadership without formal authority. During a volunteer event, several tasks were unclear and people were duplicating effort. Although I was not the coordinator, I mapped the outstanding activities, asked volunteers about their preferences, and proposed a simple allocation plan to the organizer. I then checked progress during the event and stepped into an uncovered task myself. The event finished smoothly and the organizer said the structure reduced confusion. That experience showed me leadership is often about creating clarity, listening well, and helping others succeed. Focus on initiative rather than title. Describe how you identified a problem, influenced others respectfully, allocated actions, and delivered an outcome. Show inclusive leadership and personal accountability. Question 7. Describe a time you made a mistake and what you learned. In a part-time administrative role, I entered one invoice using the wrong expense category. I noticed the inconsistency during a later review, told my supervisor immediately, corrected it, and checked related entries. I then created a short checklist requiring me to verify supplier, amount, date, and category before submission. The financial impact was small, but the lesson was important. Speed cannot replace controls. I now escalate uncertainty early and build review points into routine work. Choose a genuine but manageable mistake. Take ownership without excuses. Explain the control or process you introduced, and show how the lesson improved accuracy, communication, or risk awareness. Question 8. How would you handle competing priorities and tight deadlines? I would first list the tasks, deadlines, dependencies, and consequences of delay, then prioritize items affecting customers, risk, or other teams. I would break larger work into milestones and block time for focused execution. If priorities genuinely conflicted, I would speak with my manager early, explain the trade-off, and confirm the revised order rather than making assumptions. Before submitting anything, I would complete a targeted quality check. That approach balances responsiveness with accuracy. Explain how you assess urgency, customer or risk impact, dependencies, and effort. Communicate trade-offs early, break work into milestones, and protect quality through review checks. Question 9. What does excellent customer service mean in banking? Excellent customer service means understanding the customer's actual need, communicating clearly, and resolving the issue accurately and respectfully. In banking, it also means protecting privacy, explaining products in plain language, and never promising something outside policy. If I could not solve the matter immediately, I would set realistic expectations, keep the customer informed, and escalate appropriately. Trust is built through consistent follow-through. A strong outcome is one that helps the customer while remaining responsible and compliant. Cover listening, clarity, empathy, accurate information, timely resolution, accessibility, privacy, and appropriate escalation. Emphasize that excellent service means meeting customer needs while staying within policy and responsible banking obligations. Question 10. How would you explain a complex financial concept to a customer? I would begin by asking what the customer already understands and what decision they are trying to make. I would then explain the concept in plain language, use a simple example, and pause to check understanding rather than giving a technical lecture. For instance, I could explain variable interest by showing how rate change affects monthly repayments. I would be transparent about assumptions, costs, and risks, and invite questions. Clarity matters because customers need informed choices, not impressive terminology. Mention adapting to the customer's knowledge, using plain language and relevant examples, checking understanding, avoiding jargon, and remaining accurate. Explain that clarity is especially important when discussing borrowing costs or financial risk. Question 11. What are the main risks faced by a bank? A bank faces credit risk when borrowers cannot repay, liquidity risk when funding cannot meet withdrawals or maturities, and market risk from changes in rates or asset values. It also faces operational, cyber, compliance, conduct, and reputational risks. These risks interact. For example, a system outage can create customer harm and regulatory consequences. Banks manage them through underwriting standards, diversification, capital and liquidity buffers, controls, monitoring, scenario analysis, and a culture that encourages early escalation. In your answer, identify credit, market, liquidity, operational, compliance, cyber, conduct, and reputational risks. Explain how controls, diversification, capital, monitoring, and culture help manage them. Question 12. What is the relationship between interest rates and a bank's performance? Interest rates influence both a bank's income and its customers' capacity to repay. When lending rates rise faster than deposit and wholesale funding costs, net interest margin may improve. However, competition can increase deposit costs, and higher repayments may weaken loan demand or increase arrears. Falling rates can reduce asset yields but support affordability and borrowing activity. The important point is that management must consider repricing, funding, customer outcomes, and credit quality rather than looking only at headline rates. Discuss net interest margin, loan and deposit repricing, funding costs, borrower demand, credit quality, and competition. Recognize that rate movements can create both income opportunities and pressure on customers and arrears. Question 13. What is credit risk, and how would you assess a loan application? Credit risk is the possibility that a borrower will not meet contractual repayments. I would assess verified income, employment stability, living expenses, existing liabilities, credit history, loan purpose, requested amount, and repayment capacity under a reasonable interest rate buffer. Security can reduce loss severity, but it should not substitute for sustainable cash flow. I would also consider policy requirements, customer circumstances, and potential vulnerabilities. The decision should be evidence-based, consistent, and appropriately documented. Cover repayment capacity, income stability, expenses, existing debt, collateral, loan purpose, credit history, serviceability buffers, and policy compliance. Stress that collateral does not replace sustainable repayment capacity. Question 14. What is net interest margin, and why does it matter? Net interest margin measures the net interest a bank earns relative to its interest-earning assets. It is affected by loan pricing, deposit and wholesale funding costs, product mix, competition, and interest rate movements. A wider margin can support profitability, but pursuing it through aggressive pricing may increase credit or conduct risk. I would therefore analyze NIM alongside asset quality, customer outcomes, funding stability, and capital requirements. Sustainable margin is more valuable than short-term income that creates future losses. Define NIM as net interest income relative to interest-earning assets, then connect it to loan yields, funding costs, deposit mix, competition, hedging, and profitability. Note that NIM should be considered alongside risk. Question 15. What is the purpose of capital and liquidity requirements for banks? Capital is the financial cushion that absorbs unexpected losses, while liquidity ensures the bank can meet withdrawals and other obligations when due. Both protect depositors and support confidence during stress. Capital requirements are linked to the riskiness of assets, whereas liquidity requirements focus on funding stability and cash flow resilience. Strong buffers can reduce returns in the short term, but they protect the franchise and economy. Effective management uses stress testing to understand whether resources remain adequate under adverse scenarios. Explain that capital absorbs unexpected losses while liquidity supports obligations as they fall due. Mention depositor confidence, regulatory resilience, stress testing, risk-weighted assets, and the trade-off between safety and returns. Question 16. What is responsible lending, and why is it important? Responsible lending means making sure credit is suitable for the customer's objectives and affordable based on reliable information, rather than approving a loan simply because it generates revenue. I would consider income, expenses, existing commitments, proposed repayments, vulnerabilities, and whether the customer understands key terms. It protects customers from unsuitable debt and protects the bank from avoidable losses, complaints, and regulatory action. Responsible lending is therefore both an ethical obligation and a sound commercial practice. Mention suitability, affordability, accurate information, customer vulnerability, fair treatment, documentation, and regulatory obligations. Explain how responsible lending protects customers, reduces losses, and supports long-term trust. Question 17. What would you do if you noticed a potential compliance or suspicious transaction issue? I would not ignore the issue or confront the customer with an accusation. I would record the relevant facts objectively, preserve confidentiality, and follow BOQ's approved compliance or financial crime escalation process. If a transaction required immediate review, I would pause or refer it according to policy and seek guidance from the appropriate team. I would avoid conducting an unauthorized investigation or discussing the matter broadly. The priority is protecting customers and the bank while maintaining procedural fairness and regulatory compliance. Focus on pausing inappropriate action, preserving confidentiality, following procedures, documenting objective facts, escalating through approved channels, and avoiding customer accusations or unauthorized investigation. Question 18. How can banks use data and technology to improve customer outcomes? Data and technology can reduce processing times, improve fraud detection, personalize useful support, and make everyday banking more convenient. For example, analytics may identify unusual transactions or signals that a customer needs assistance. However, better technology requires strong data quality, privacy, cybersecurity, model governance, and human oversight. Customers should not be disadvantaged by opaque automated decisions, especially when circumstances are complex. The best approach combines efficient digital tools with accessible human support and clear accountability. Discuss faster service, personalization, fraud detection, digital access, automation, data quality, privacy, cyber controls, fairness, and human support for complex or vulnerable customer situations. Question 19. How do you stay informed about the Australian economy and banking industry? I follow Reserve Bank announcements, APRA publications, BOQ updates, major bank results, and reputable financial news. I focus on translating headlines into business implications, how rates affect mortgage affordability, deposits, funding costs, business investment, and arrears. I also compare several sources because commentary can be incomplete or biased. Recently, I have practiced summarizing one economic development in 3 parts: what changed, why it matters for banks, and what risks or opportunities it creates. Explain a consistent routine using credible sources such as the RBA, APRA, company announcements, reputable financial media, and market data. Link developments to rates, housing, business lending, funding, and credit quality. Question 20. What questions would you ask us at the end of the interview? I would ask how graduates are matched to rotations and what successful performance looks like in the first year. I would also ask how teams support graduates when they encounter unfamiliar technical or customer situations, and how BOQ measures customer outcomes alongside financial performance. Finally, I would be interested in the capabilities the organization expects future leaders to develop as banking becomes more digital. Those questions would help me understand the role while showing that I am thinking beyond simply securing an offer. Prepare thoughtful questions about rotations, success measures, mentoring, culture, customer impact, transformation, and graduate development. Avoid questions answered easily online and demonstrate curiosity about contributing to BOQ. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.